Welcome back to my more important analysis videos with me, Richard Perry, market analyst at Hantec Markets. On Friday, the 10th of August, amongst the majors, the euro-dollar chart is the key chart to look out for today. Look at this big downside break of the key support, 1505. I've talked about that so many times in the last couple of months, and we've now broken that range. We've now taken a sharp downside move. I did sort of wonder yesterday about the weakness of that recovery, and yesterday we saw a sharp selling pressure, over 80 pips of downside, and now today, this morning, we've seen that key floor at 1505 broken. Look at these momentum indicators. RSI 33 falling away, multi-week lows, and downside potential in that move. MACD line similar, only just now sort of gathering momentum to the downside. Stochastics have turned back lower. This does not look good for the euro, really doesn't. Now, in terms of the downside break, you'd say about 350 pips is the depth of that range. So you project that downwards, and what does that give you? Around about 1150. So if you zoom out, you can see that the euro is now trading at the lowest level since July 2017. 1310 is the next real support that comes in. Yes, we got that initial low of 1430 today, where the market's just bounced a few pips off that, but ultimately 1310 is the next level, and then you're looking sort of 11 figure area. I suppose 11 figure area up towards 1280, that is the top of that range. But yeah, it really is looking as though the euro is moving into sharp reversal mode now, and momentum indicators don't look good in that scenario. So that is looking what we're at the moment on euro dollar. Any rallies now, I think, on euro dollar, a chance to sell. 1570 was an old pivot. Dates back to that low there back in mid-July, but 1505 is really the 15 big figure, I suppose you'd say, is really now the basis of resistance overhead. That old support becomes new resistance. You could argue there's a basis around 1530, but yeah, having broken below 1505, that old low of the range becomes new resistance. So any rally that unwinds the market back towards there is an opportunity. The RSI is a bit oversold, bit stretched on the MACD lines as well. You could even argue the stochastics are showing a little bit of a positive divergence. That might induce that recovery, but I think, as I said, looking at the bear convergence and ultimately sort of turn lower of all these moving averages in bearish sequence, yeah, really sort of death crosses all over the shop on the hourly moving averages, doesn't look good, and any rally I think is a chance to sell. So I wish you good luck in trading, and I'll speak to you later.